Tech stocks, the QQQ ETF, Tesla, Nvidia, big banks and the KBE ETF and the ASX are all looking rosy. Why is that? Welcome to the Daily. My name's Jessica Amir. I'm a market strategist here with Memu. Thanks for your company. Well, US stocks have surged overnight, erasing the losses for 2025, and most of the key sectors in the S&P 500 all lifted overnight, and investors are expecting more gains and positive setups for buying opportunities from here on in. Now, this is all for a couple key important reasons. Not only do we now have two positive inflation prints behind us, we saw core inflation fall more than expected, but we also have Israel and Hamas agreeing to a ceasefire. And last but not least, bank earnings, they're packing a very good punch, and this is suggesting that we could be expecting great things from broad company earnings ahead, with big tech names start to report from as early as next week. But regardless, the proof is in the pudding. Overnight, we saw far better than expected results from JPMorgan Chase, one of the biggest banks in America, Goldman Sachs, Wells Fargo, and Citigroup. All their shares surged on quarterly earnings, rising more than expected. So their shares are doing really well. Particularly worth noting the KBE ETF. That broke markedly higher. It's up for the third straight day. Now, this is an ETF to watch if you already haven't considered it, or if you don't have positions in some of the banks. This is one for you to watch. More gains are probably ahead. That is according to the technical indicators. And of course, you don't even have to read the tea leaves. Listening to and reading the bank's results last night, you can see that positivity is expected ahead. So perhaps that's a reason for you to consider this ETF. But all in all, last night's earnings, a great sign for most investors. Of course, banks, of course, are a barometer for the health of the US economy. So perhaps that's why investors were broadly buying into S&P 500 stocks as well. And that is why the S&P 500 index jumped about 2% at one point overnight, its biggest jump since the US election. Meanwhile, we did see the biggest celebrations in tech stocks, with lots of investors ploughing into tech. The NASDAQ 100 rose, or if we can think about the NASDAQ collectively, the NASDAQ composite rose 2.5%. Now, the technical indicators are suggesting more gains could be ahead. So do keep an eye on this ETF that we've got on the screen. It's one of the most traded NASDAQ ETFs globally, the QQQ. Keep an eye on this and stocks in the NASDAQ 100 and the like. Now, speaking about stocks in the NASDAQ 100, Tesla, they were a showstopper last night, of course. In case you missed it, their shares jumped 8%, all for good reason. A lot of good reasons, in fact. The incoming US Transportation Secretary suggested that they would be easing pressure on federal rules for self-driving cars. Now, this is what a lot of analysts were waiting for. And of course, this is at a time when Tesla sales are expected to pick up. Remember what I've been speaking about for a while now, and that is earnings growth drives share price growth. So Tesla sales expected to pick up, not only because, look, Tesla's unveiled that revised model in China. They've cut prices for their Model Y in China too, but they also cut prices at the weekend for their Model Y in Australia. And of course, this is all ahead of Tesla unveiling their cheapest model yet, and that's later this year, expected to be unveiled globally. But as I've been saying, I do anticipate Tesla to be the biggest benefactor of Trump taking to the White House. So do keep an eye on Tesla shares and Tesla ETFs, given that sentiment is probably going to pick up, particularly ahead of Donald Trump's inauguration next week. As for other shares to consider, Nvidia shares a standout, rising over 3% overnight. Of course, not only Nvidia is expected to, see a comeback because TSMC earnings are out tonight, and that might be expected to boost chip market sentiment. But Nvidia stocks and the QQQs of this world, they have been oversold and they appear ready for a rally up. So that's something to consider. Last but not least, the Aussie share market, it's expected to potentially break higher and maybe enter an exciting period of higher highs ahead, with investors maybe moving into buy everything and anything mode for the next couple of weeks. Now, this is because bond yields have fallen, but so too has the US dollar, while metal prices are higher. You've got gold moving higher. Other metal prices such as copper, aluminium, and oil prices are up as well, 3%. And iron ore is also up 1%. So basically, this spells that we could potentially have full steam ahead for commodity stocks, but broadly a risk-on rally for the next couple of weeks, particularly for interest rate sensitive stocks and sectors. Bearing in mind, why am I saying this is going to be a 2-week potential rally? Because the next catalysts are, of course, PCE and then the Fed meeting later this month. But until then, investors will be focusing on company earnings. Now, ladies and gentlemen, we do have a wonderful treat for you today at 1 p.m. Australian Sydney Eastern Standard Time. Do tune in to Michael McCarthy, our Chief Market Strategist and Head of Commercial here at Moomoo, and myself will be unveiling the key stocks and sectors that you need to watch for 2025. We'll also be diving into what you need to keep on your radars for earning season. Bye for now.